Great. Welcome, everyone. Thank you for joining us today for this exciting panel discussion on banking and financial industry. So it's truly a pleasure to have each one of you here from the audience side, from the speaker side, and I trust all of you are having a wonderful day. Today, we have a very interesting topic, which is harnessing the power of fintech, driving credit union evolution in the digital age. We will discuss in detail about the same throughout our webinar. But before that, let me begin by introducing myself and AI CoreSpot to you. My name is Nitin Naveen, and I'm Vice President of Innovation and Strategy at AI CoreSpot. With over a couple of decades of experience in different consulting firms specializing in emerging technologies, I feel fortunate to consistently engage with numerous stakeholders, innovators, global leaders who are all there and driving the positive change in the industry. Joining me today, I have a couple of my colleagues. Arvind is there, and in the back end, my colleague Naveen is there, who will be infusing energy into this event. So a big applause for their dedication in making this effort and making this gathering a great one. Some facts about AI CoreSpot, which I wanted to bring forward in this forum to all of you. It was founded over 3 years now and is meant to be a source of inspiration in the tech space, focusing on emerging technologies such as AI, ML, robotics, IoT, and so on. Our webinars serve as a platform to share the latest advancement in these fields, providing fresh insights every month. As we continue to gain momentum, we aim to be the leading AI-driven community worldwide, fostering collaboration and growth among like-minded individuals. We are committed to curating different industry-packed webinars and hybrid events, leveraging insights from the industry leaders, subject matter experts, and all our trusted partners to deliver credible and valuable content. Additionally, our content is meticulously crafted across various digital platforms, which includes blogs, podcasts, videos, and monthly newsletters, which we share with all our opt-in leads to keep our audience informed and engaged. Bringing back the attention to today's webinar, for which all of you have registered here for. The topic is how credit unions are embracing fintech for evolution. Gear yourself for our enlightening discussion on challenges, steps to embrace, AI integration, risk management, and lot many things which we'll discuss within the scope of banking industry and specifically credit unions. Our panel of experts is poised to share invaluable insights and engage in thought-provoking discussions that promises to leave a lasting impact. Before starting the conversation, we would like to extend gratitude to our community partners. We have three great companies. It includes UW Credit Union, InfoVision, and Alta Domus. Their invaluable contributions have been instrumental in making today's webinar possible. And of course, a heartfelt thank you to all our attendees. Your presence and participation are deeply appreciated. As we embark on this journey together, our primary goal is to equip with invaluable insights and meaningful relations. Whether you walk away with innovative ideas or forge new connections as the things move, your engagement is a testament to our collective success. So without further ado, let's introduce our esteemed speakers for today's session. Our first esteemed speaker is Heath Isley, who is Director of Software Engineering at UW Credit Union. Our second esteemed speaker is Parveza Rahman. She is Director of Product Debt Capital Market Portal at Alta Domus. And our third esteemed speaker and moderator for today's event is Chelsea Murphy. She's Industry Principal, Banking, Financial, and Services at InfoVision. Before we begin, a quick disclaimer. The views shared by all our speakers are their personal ones and it's not necessarily reflected of their affiliated organizations. So let me hand over the stage to Chelsea to begin this exciting panel discussion. Over to you, Chelsea.
Thank you, Nitin, for the introduction. And thank you, Parveza and Heath, for being here today. I'm excited to discuss how fintech innovation is affecting all banks and financial sectors. So if we want to go ahead and get into it, Parveza, I would like to start with you. I just want to know which specific domains or operational facets within the credit unions do you anticipate experiencing the biggest change with the advancement and innovation with fintech?
Thank you, Chelsea. I think that's a great question. As I look at the evolution of the banking trends, the consumer market and commercial market, I think there are three areas that has the most potential to be disruptive with fintech. where credit union can leverage the technology. First is enhanced membership experience. There is a lot going on with RTP, real-time payment, and other avenues where the product offerings from credit union can be enhanced by partnering with fintech. The second area I see is risk management. I mean, one of the things in membership offering, one of the pain point is like security. But with the advancement in blockchain technology, that is becoming a more reliable technology which will ensure security. So definitely the risk management is getting enhanced. And also there are other AI technologies that allows better monitoring of like fraud for this space. So I think that's another area where credit union will benefit from partnering with fintechs. And the third area I think is process efficiency. So again, with AI tools, there are a lot of regulatory compliance stuff that can be streamlined. And also like the contact centers part that are very repetitive, could be transactional in nature, can be outsourced to AI chatbots, where the main core of the contact center human touch can be focused on more focused on challenging situation that the customer is already. So it's more interactive than just transactional. So I think that will really enhance these three areas.
And you stated it with risk. Can you kind of elaborate on what you mean that fintech is going to help with the risk management?
Yeah, so when we say about risk, right? So one is when you think about lendings, right? One of the things is the lendings and how do we make lending offers. So the credit union has a lot of data information about their users, their transaction, their history. What can be done with the advancement in analytics tool that is offered by fintech as a one-off solution is leverage that and make the decisioning of lending. And this is going to allow credit unions to reach out to more underserved market, which have like not the best credit score, but analyzing the behaviors could allow credit union to reach out to them. So that's what I mean by one aspect of the risk management. The second would be with the blockchain technology and the tokenization aspect of it. It really helps with the decentralized, the tokenization of assets will really help with cutting down the cost of transactions. And maybe even international ones, right? So it would really reduce the cost efficiency, make it more cost efficient to offer those solutions, which historically were more costly offerings which were considered by credit unions or any other banks.
Yeah, I completely agree on that. And Heath, did you have anything to add to that part?
I would agree that really the fintech's driving a lot of those spaces, especially around the blockchain and getting more of that external transparency and transactions out there, and really helping people. Really what fintech is driving is innovation in the space, and how we partner with them is how financial institutions partner with them really helps bring together that experience and really what the members demand that experience be.
Right. With you, Heath, how can traditional financial institutions, like particularly credit unions or banks in general, navigate and maintain their competitiveness with all the innovation that's happening and keeping up with it?
Yeah, so as I just stated, I guess, so the fintechs are good at innovating in the space and providing new and faster ways to have money move, as well as better visibility into their money and how they communicate and interact with it, as well as accessibility into those markets. And really, for a classic financial institution, like ours has been around for over 100 years or close to 100 years now, really you get stuck in kind of what works, what goes there. And with fintechs coming in and creating, kind of disrupting what the classic financial back and forth is, and the experience that the members look for. It forces, through member demand, fintech or the classic financial institutions like our own to partner with those fintechs in order to bring that experience to our members. And you're starting to see that in a lot of different sectors or different levels of it, as mentioned. So some of it's like customer interaction through chat, other ones are through fraud analysis, and many people are also using it in really just trying to do the UI design to make sure that it's more accessible to members as well. How do we present that data through many different platforms? Is the expectation is changing from the member, which is forcing us to have to partner with those fintechs in order to bring that experience all the way back to the members themselves.
Yeah, and with that, do you think it's kind of more used like for customer engagement? Is it more innovative there, or is it more kind of behind the scenes with
So I would say
analysis, where you're seeing most of the change?
Yep, I would say it's both. So I mean, a great example on the front end is instant money cash apps. How do you bring that experience to a classic financial? Buy now, pay later. How do you bring the buy now, pay later example out? So those would be more front end facing. And chat, obviously, that's right at the member's fingertips. But on the back end, you're also seeing a lot of change. I know there's big investment right now in automating approval of loans and trying to do that in a non-discriminatory way using AI. And so there's a lot of vendors popping up in that space, as well as in the fraud space, looking at customer behavior and analytics. And so really it's on both ends of the spectrum. I really think fintech does a great job of trying to exist on all edges. Everybody's kind of looking for their niche to drop into in those amazing little companies. And there's so many. I think that's the trick, is which ones are actually worth investing in. You don't necessarily want to be the first one in, but you want to be fast enough on the reaction to know which ones are going to be part of the expected experience by members. So that way you're competitive. What you don't want to do is lose your members to another bank or credit union who's been able to implement something before you did.
And just to add to what he just said, I mean, as a new generation, younger generation of digital native, establish their career, accumulate weight, and accumulate wealth, and become the mainstream clients, right, or members. What has happened is the seamlessness they see in other industry verticals, particularly retail, which is less regulated. They tend to expect the same here, right? And what fintechs are good at is like they don't focus on the breadth of solution, they focus on niche solution, and that enables them to really cut down the cost and automate the process. So by partnering with fintech, as credit union thinks about the product strategy, they can bring those industry seamlessness into the financial sector world. And also in the same lines, by doing this, they can also personalize the offerings, right? Like with the whole AI regulatory, like AI and algorithms, that offering can be personalized. Like I think there's a lot to learn from the retail side. I mean, especially like with the regulatory umbrella that financial sectors are regulated by. But I think there is like, you've already seen the trend in retail and other spaces, and especially with big tech coming into this space as well, right? So new bank with big tech, I think it's kind of becoming the need of the hour to make sure that those offerings are adopted by credit unions.
Yeah, I appreciate the commentary on that. And kind of, because you guys are going back and forth where it can help, how does it, I guess, personally affect the efficiency of like the customer engagement, operational side, fraud analysis, risk management? Where do you see the most change for that part of it, where it streamlined the system? Parvisi, you can go ahead. You can start.
I can start and then he can. So a couple of things which I see, like particularly the contact center portion, right? There's been a recent, there was this credit union called True Financials. They have adopted the AI into like learning their policy. And what it does now is it allows the contact center to provide the actions like how to open a locker or stuff like that. So the training has evolved in such a manner. And what helps how AI is helping in that process regard is that it's allowing the employee or the contact service customer service representative to focus on things that matter, not necessarily bogged down by the technicalities of all the process. So I think that's one of the huge things which will be very front and center and reflect in the interaction. It will reduce errors, right? Because it's all documented. It's not like asking this person or that person that how to do it and coming to it. It's already documented and it's given to them like a knowledge base. So there's a centralized knowledge base which anyone can refer to. It's standardized. So that's one way to do it. And I'll continue and I can contribute more to this.
Yeah,
I would say customer service is a great way to do it. Another way we're seeing is in that fraud detection. So your traditional, it's twofold. One is AI has allowed the fraudsters to be much more savvy in their ability to come in and defraud us. But at the same time, AI and a lot of fintechs have came into the scene to try to detect that. It seems to be somewhat of a fighting battle where we get better, they get better, and so on and so forth. However, a lot of those operations allow our staff who are concentrating on fraud to have much higher value of their time spent because they can cover many open cases at a given time with data coming at them. Very similar to the use case described there with the call center and using a chatbot in order to try to take the mundane or the less interesting call work away. It definitely is helping make the work that our people do to be more focused on what's important.
Kind of more streamlined. They can actually, take out the step that was taking up most of the time. And with that, you were saying like the fraudsters are coming out. Are you seeing that more often? That like there are more fraudsters that are coming out and kind of using it to their advantage as well? Even though it's supposed to be a system that kind of helps, it's also kind of helping them as well.
Absolutely. I mean, so a working current example is we'll have, we introduced the ability to, we're a digital first bank. So the vast majority of our interactions are through our digital platform. We have many branches. However, our web branch, we call it, actually represents the large majority of the work or the interactions that our members have with us. That being said, when people open accounts, you can do it completely virtually now. We're actually instituting where you do facial recognition, which you've seen in many different places now, as well as trying to scan your ID in order to pull that information in. And that, for 6 months, worked really well at knocking the fraud rates down. However, what we see now is we're starting to see people generating driver's license pictures that they can upload with artificial intelligence to the point where even the ID on the back is scannable, right? So now we're starting to look at behaviors, what IP addresses are coming from, all the different signal data that you might look into to see if is this person acting like sure they're not, to determine if they are. But one could argue it won't be long until they'll be able to identify what we're looking for there and be able to mimic that as well. So it is kind of a back and forth battle on that front.
Yeah, I think it's kind of the balance between banks like going in person and kind of being online is like you have to be able to have that system that can detect the fraud. Pravisa, go ahead. Sorry to interrupt.
No, so in terms of fraud detection, right? I mean, the false positives of fraud can be very embarrassing for a customer, right? Like get rejected at the point of sale. So I think the evolution in this technology and by partnering with fintech, like so there is a cost to building things in-house or outsourcing it, right? But I think there's a way to get the best of the both world where you can leverage the base technology. That way you're not incurring the cost to develop that from ground up, but then have your expertise there from a fintech perspective, from a regulatory perspective, to understand those things so that you can bring down the false positive, right? Because the two things the customer wants is like the seamlessness of it, right? One is like obviously save them from embarrassment, but same thing, asking like sometimes if you look at when you interact with banking application, just to regulate that fraud, just to protect the customer from fraud, the same questions get asked again and again, right? I'm sure you guys have faced that sometimes. You're in a customer call and they ask you to keep verifying the same thing again and again. So how do we kind of bring that down, right? That barrier of interaction down, but still preserve the protection of the individual who is trying to interact. So I think the advancement in technology brings better risk management and also enhances the customer experience in that regard.
Yeah, and I can agree with that. I mean, there's always going to be something around the corner where someone is trying to defraud. But with the enhancing technology, I do think it's harder to do that. So I know that we're all moving in that direction. And kind of, discussing the fraud and the challenge with fintech and AI and everything, what are kind of some of the other things that you'll have to overcome with integrating this into banks?
One thing that comes to mind is, so we talk about this algorithms, right? So today, I mean, like I have a background in analytics where initially everything was very like ground up. You would look at each thing and build it up. But now it's very like building a model has become like a piece of cake. Anyone can build a model. But the thing that comes with it is that we are not aware of the unknown bias that are inherent in the algorithm, right? So that's where the expertise of individual who really know to look into the underworkings of those algorithms come into picture. So I think this would kind of it would become a trend in the industry. Like as we look for talent to bring into the space, it would be more people who are more looking under the hood, who have the understanding of the inner working, so that we do not discriminate without even knowing about it. I mean, when you're aware of something, you can take care of it. But I think one of the biggest threat is the unknown bias that this algorithm poses. So that is something that has something like that. That is something we have to be conscious about when we go in this route.
Mm-hmm.
Yeah.
And then, Heath, is there anything to add?
Yeah, I guess, when we try to integrate with fintech, a lot of fintechs have done a great job of integrating with a lot of the other partner solutions we have, whether it's our core banking platforms or if it's, our loan decision tools, in order to try to add in against their kind of niche functionality. And so a lot of times, that's where we start. That's how we can seamlessly integrate. They're already plugged into this tool. We tend to be a more build first shop. So most of our digital experience is home built. We have a pretty large engineering team here. So for us, integrating is very easy with fintechs, because most of them are, SaaS providers with APIs that are really easy to pull in and go with. But I think that's the challenge that a lot of classic financials have with integrating fintechs, is if you have a complete purchase ground up system where your mobile app's even just Fiserv DNA on the fly, really you're at the whim of your provider of your digital platform if they can integrate with them or not. So that's probably the biggest barrier to integration for most financials at this time.
Yeah, and you said with traditional banks and stuff like that, are you kind of experiencing that problem being mostly an online?
For us, I think we're ahead of the curve on it a little bit. It allows us to be more nimble and dynamic and quick, because most of our code is in-house created, so we control the stack. It's where you have purchased a lot of the layers of your stack where you're really at the whim of whoever it is that did build, that you're purchasing your mobile app from, for instance. If you can integrate facial recognition into it, it depends on the provider of your mobile app.
Right. I can agree with that. And then kind of switching back over, because we talked a little bit about it earlier with the member experience. Parvisa, I'm kind of wondering, can you elaborate on why you think like member experience is one of the key things that everyone needs to be hitting at the moment and figuring out how to make it better?
Yeah, sure. I think some of the things like if we look at the retail world, right? I mean, you see there are certain things that customers are beginning to expect from the get-go. And with the evolution of the payment competition, right, be it PayPal or Square or likes of the world, Venmo, those are things that are becoming stable stakes at this point. So for a credit union to not offer them, it's it's just going to reduce member engagement. So the cash applications, right? Those are very big deals at this point. Online account opening, right? Because with this whole concept of like work from home, people tend to like to do things on their own. Like self-serve model is on the uptick. So anything that can be done, check deposit, these are like basic features that has to be offered, right? For the new generation to even consider being a member. So I think those are like basics to start with, and from there we can go ahead with like more personalization depending on what product offerings the credit union wants to offer. So it could be one of the first point, and then we can go from there.
Yeah, and I know that Heath may not have this problem, but you stated with like the online banking, the cash apps, everything like that, it may be easier for a bank that's completely digital. I know, especially after COVID, kind of how has the credit union world made up for that you've seen personally? Has it just been like mobile apps, offering partnerships with other type of digital banking platforms?
Yeah, so yeah, I think a couple spots have popped in, especially post-COVID with the digital banking. 80% of our, so I'd say 90% of our interactions are occurring through our digital platforms. Of those, 80% are happening through the mobile app. So people do really enjoy having the mobile app experience really close. And then furthermore, what you're seeing is people expectations on cash, for instance, is really, when Venmo came out, really changed the market there. And obviously it took away from financials like ourselves. However, with Venmo coming out recently in cooperation with a lot of the banking industry and integrating directly with the banking, it's kind of now Venmo is one of the number one cash movement services in the country. And I would, similar to what was just said, I would say that if you don't have Venmo on your banking app, you're probably losing members because of it, right? People are looking for that functionality. They want it. Another example would be Plaid. Plaid allows you to integrate seamlessly your bank experience to several providers, whether they're retail and or other FIs. And if you're not having that Plaid experience, you're losing membership right now because people are actively asking for it.
And also,
I feel like I kind of have like a Oh, sorry, go ahead.
So to add on more to what Heath was saying, like Plaid, Venmo, these are there. And now with the Fed now, right? With the Federal Reserve releasing the Fed now in 2023, that is becoming a hot topic, right? Like 50% of credit union who have not already adopted payment solution are considering Fed now. But again, their implementation plan are projected from 2024 or beyond. It's still not like set in goal that this is going to be like their objective, even though it's becoming such a mainstream feature. So I think that's something that needs to be thought about. And also this RFP solution. I mean, we talk about member, but member can be both retail and commercial, right? A recent report released by Accenture showed that there is a revenue potential from this RTP solution to commercial side of it. And they project that market to be $371 billion. So that's a huge market. So integrating this capability, this cash now capability with other product offerings, because if you look from the commercial side, they don't think about payment like one payment. They think of it more as a workflow. So how can credit union integrate this payment as a part of a product offering that helps commercial regular like automate their workflows? I think that's not only like a feature that will attract members, but it's also going to be a revenue potential for credit union. So I think it's a very it's very important that they focus on it and deliver that solution.
Yeah, I agree. And I feel like I kind of have a unique experience because I have a digital bank and a credit union specifically. So kind of seeing the different positives and negatives of each side. But I do think everyone, even they adopted a mobile application. So I know that everyone's kind of moving in that direction anyways. And kind of with that, just because one bank uses AI, the other doesn't, for me personally, Heath, where do you use AI kind of in your own space?
Yeah, so we've talked a lot about chat already. So that's, I think, using the large language models and how much they've matured in the last 3 years, and incorporating that into your frontline experience, to really put knowledge-based type articles as well as your basic credit union information in there to capture the easy questions to answer for members. I think that's the most obvious one that a lot of people are jumping into right now, a lot of vendors in that space. But I would even say that space is getting to the point where now the cloud providers like AWS and Azure are making that functionality commodity. So you really could construct your own large language model chatbot in a matter of hours with a little bit of expertise in the cloud platforms right now. So that one's even getting away from the fintech, and you're starting to see it become a commodity functionality. And likewise, your IVRs are starting to implement that as add-on functionality for your call centers anyways. So that's one spot that's, I would say, mature at this point. Another is fraud detection. We talked about that already. I say that one's a constant battle. You're constantly fighting it, trying to build models. The one thing I'd add there is, if you're large enough FI to have your own data warehousing team and starting to collect data and analyze it, I'm a firm believer in having an internal model versus external. So, I'd say partnering with a fintech that has many other financial institutions they're watching, that's great because they're seeing what's happening across the board. But having your own internal models gives you the opportunity to kind of look at what's happening to you. And then maybe using those in conjunction with each other in order to do your rule engine, basically, and if somebody's being troublesome or not. And the last one I'll talk about is loan approvals, auto approvals. Because right now you get a lot of loan applications, whether it's a credit card application through the mobile app and everything. That'd be the simplest version of it. And we have a lot of members, and so we have a lot of loan applications at any given day. Having a loans team capable of approving all those is gets to be a heavy burden on them. Especially when a lot of them are just, 750 credit score. They want $3,000 credit card. Yep. And so what we're seeing is integrating with partners on trying to automate a lot of that, making those auto approvals on the fly. We're anticipating we could save as many as 50 to 70% of approvals, and really allow our loans team to concentrate on those bigger ticket items and the higher dollar value, and maybe the more questionable applications, where you want to have eyes on them.
Parvi says, do you have anything to add to that?
So I think in addition to these offerings, there's a huge uptick in the robo-advisor, right, from investment space. So like accounts of the world. So if that can be built into the product offerings for members, they don't have to go and look for that solution elsewhere. So I think that's another opportunity where AI can play a part with the fintech integration.
Yeah, and kind of how are you guys, balancing, I guess, between AI and like people interaction? I don't know, like you stated, after COVID, everyone's more about online. They don't really want to speak to people, but I know that there's still that, option where maybe you're not getting where you want to be, or you're not understanding kind of what the AI is generating for you as a customer. How are you balancing keeping a more personal aspect to it?
I think one thing has to be understood that if we are outsourcing the transactional nature of this customer service to AI, then what is left is the part that requires that empathy part, right? So one way to be so essentially what that means is the training, how a customer care representative is trained needs to evolve, right? So because earlier the things that were routed to them might be a very transactional thing, but now you can take it for granted that if something comes to them, it is an escalation. You are most likely to have an angry, frustrated customer on the other side. So that's one thing, upscaling them, giving them the right training. And the other thing is like the seamlessness aspect. So if you think about it, what could frustrate a customer, right? It's the seamlessness of being able to interact with whatever channel they prefer. So the omni-channel strategy becomes very important in this case. So if a customer is contacting you via email or like chat or the other thing and they're not getting the solution. So you can think that the customer is already frustrated. So when it comes to the customer representative at this point, how can we provide them the tools with an AI aggregated in an AI aggregated manner so that when they come to them, when the end user is coming to them, they do not have to repeat the same story again. I think there will be a touch of like at least coming down the customer that they already know what the issue is and is ready to help instead of them having. So I think it has to be a more I want to say creative way to deal with it, right? You think about different elements, really think about the human nature of things and bring that to the customer. So I think that would be the approach we will need to take.
Mm-hmm.
Yeah, I agree with that, and I really think that you got to carry that member experience from the digital into the branch or to the call center, and that's carrying that metadata in between the two. And even with, like, say, a new member, somebody's applying for a loan online, and maybe they didn't pass their ID check because their camera's old on their phone, and they just weren't able to get a good enough picture for us to verify. And we send them to a branch to go ahead and get verified. Obviously, they might be a little frustrated when they show up, but how can, when they show up, they can pull up that application where they were already at, so they don't have to start over and continue it right there in branch. And so looking at that, and so a lot of that is building that experience as much as it is integrating these capabilities.
Yeah, and I think it's the understanding of working with, not working against. And I know that some people are still adopting that framework and the mindset, knowing that it's a tool that we're using. It's not something that's just going to be taking everything over. So I can understand that from, this perspective and a customer perspective. And with that, because you were saying, having them kind of work together, what's kind of the pivotal role in that spot for risk management? Because you could, like you stated earlier, have them fill something out online and then didn't work, they come in and then they automatically have it up. How is it kind of like controlling that risk management of not just using what is on AI or within fintech?
I'll take a first stab at it. Yeah. And I guess with risk management, my thought on it is, if you're an FI, there's a certain amount of risk you're taking on. That's the cost of doing business, right? And so it's just trying to weigh that against, what is acceptable risk and what isn't, especially with who you know and you don't. The more digital we get, the more members we get that aren't anywhere close to where maybe we're stationed or a branch. So how do you mitigate that and control it? And really, that's, in my opinion today, that's having smart people who are concentrating on it. You have to have a team concentrating on that, and then trying to set those thresholds. As a technologist, it's us building those thresholds into our process and automation. That way, when those thresholds are exceeded, we can kick those out to be viewed and looked at. I think that's, to me, that's the biggest part of risk in using these vendors, is that, and again, I said it before, we don't like to be the first in on a fintech if we can help it. We'd rather see them hit the industry and see some demand from our members before we roll them out. We're just not rolling them out to be bleeding edge. We're rolling them out because this is functionality people want.
Yeah, and to add to that, I mean, when you think about the use case for which you are using this AI models, right? I mean, it's not like you start with saying, oh, I want to use AI. You start with the business use case, and then you work with legal compliance to see what are the guardrails that needs to be put in place, right? And then, like I said before, having the expert who understands the inner workings of the algorithm, because if you just run an algorithm, it spits out the result, but then if someone contested that you are being racist, how do you explain the why it did what it did, right? So I think there has to be, it is a process. You can't, like when we say about adoption and moving about AI model or fintech, it has to be a very conscious decision in each step, so that you have all the guardrails that is needed before you proceed. So if you proceed in this way, in a very thoughtful way, with the business case in mind, what is the result you're trying to get, I think you can mitigate those type of risk.
Yeah, and it's mitigating the risk without putting too much information in that would cause a bias, So I can understand it from that point of view as well. Kind of switching gears here a little bit, because I don't want to take up too much time on risk management. How have like cash apps influenced you guys in the fintech area, and how have like the solutions kind of helped with the cash applications and integrating them into your own systems? Heath, if you want to go ahead.
Yeah, so cash apps, obviously, when they hit the scene, they got very popular very quick, especially with the younger demo. And we actually, younger demo is what we're after. We're UW Credit Union is University of Wisconsin, so we definitely chase the university students and try to become lifelong members with them. And thus they are adapting those things very quickly. And what we saw is people high demand for it, and how to integrate. For one, how do they integrate our banking app to these apps to tie their bank account to, so making that easy. But then two, once again Zelle became available, and then we could integrate directly, so now they don't have to leave our banking experience in order to send money. Even better, right? So now we can control both ends of that. Even though Zelle is, we're definitely paying the piper on that one, because Zelle is very expensive to integrate it at the financial institution level. Versus Cash App, the onus kind of fell to the person sending the money. But now it's free for the member to send their money, so they enjoy it much more. So, that's a nice attractor to pull people in and say, hey, you can use Zelle here, and it's very easy at your fingertips. Pull your members in and such. So really working on that experience and making one app instead of having to have two apps to do your money transfers. That helps members out a lot.
Yeah. And Parvisa, how's that been kind of on the credit union side, like with a personal bank bringing in instead of a digital bank?
I mean, I personally haven't worked in that particular area to answer it the way he did, but I think with the evolution of the blockchain, like the decentralization nature of the blockchain technology, I think it allows you to it kind of brings down the fear of fraud, right? So I think it makes the credit union more open to exploring those technologies if they have not already done. So that would be my take.
Yeah, I agree. And Heath, kind of back over to you, just specifically with cash apps. I know specifically because there's so many of them out there now, staying competitive, whereas Venmo used to be the main one, and then they started doing all the charging and everything like that. Then it went to Zelle, and it's going like Cash App, and it's just changing forever. Kind of, how do you stay on top of that to make sure that you're offering your customers the right, I guess, product in the mobile application?
Yeah. So we can't integrate closely with all of them because it would just be too much effort. I'd have to have a team of developers dedicated just to cash apps, and we're not big enough to justify that, right? So what we're kind of seeing is the better option is to integrate with an aggregating partner like Plaid. And then now, for instance, if you log into Venmo and you want to access your financial, traditionally you'd have to do that funny thing where you had to enter your routing number, then you get two deposits in your account, and you got to check those two deposits and approve it in order to tie the ACH together. What we're seeing with Plaid is it allows that much tighter integration, a much smoother feeling where you're just logging into your FI. We can still do our two-factor authentication. We can still do our biometrics when you do that login, which allows us to feel much more secure about that connection. And then they're just using an API endpoint that we're providing in order to do those transactions. So this allows us, even if they're not in our experience, which we'd rather they were, this allows us to extend our experience very close to those fintech apps. And the thing is with Plaid, a lot of, with all these new fintechs integrating to them, we'll look at reports, we'll have 3,000 new apps that somebody logged into this month via Plaid into our platform, right? So just by integrating once with one fintech vendor, this aggregating vendor, it allowed us to be very present in all these applications, which again, great service to our members, and they can try and play with stuff all they want to, and we don't have to constantly do work to keep up with it.
And I think I keep going back to this, and I think it's just because with innovation there is the risk management part of it. How do you control that part with the cash applications, because it is an outside source?
It is, and it's a major vector for fraud. So that's why by directly integrating, we can put our two-factor in there. So we are at least forcing people to do a full authentication every time they're making that type of transaction with us. Because traditional ones, like old screen scrapers, if you go back in the day, like how many of them used to do it even 5 years ago, I guess back in the day, those ones, many times were fraud vectors, because if that third-party company was to lose your credentials, because they were storing your credentials natively, now they're much more prone to having captured your banking information and being able to leverage that elsewhere, which is not ideal by any stretch of the imagination, and obviously the worst case scenario. So by using tokenization through these third-party aggregators, it's a much safer experience, and that mitigates the risk quite a bit for us. And many of these third-party vendors also have terms and conditions which allow them to, if fraud is occurring on their platform, to try to make up for it and cover that as well, which does mitigate the risk to us and our member to some degree. We might have lost Chelsea.
I think let Chelsea be back. In the meanwhile, once she's back, let me share a few questions with you, which we have received from the audience.
Sure.
Maybe I can go with the first question, which we have received from Pradyum Ramesh. What he has asked is, how can credit unions ensure that everyone, including those who prefer traditional banking methods, feels included and well served as digital services become more common? So we can take views from Heath and then maybe Parveza as well.
Yeah, I guess to jump quick on that one is, I would say we're investing heavily in still creating new branches across our coverage area. So we still have that traditional experience where you walk into a branch, smiling face helps you with your accounts, deposits your check, and it allows you to take money out. And I think continuing to invest in that, so your traditional member has that warm, friendly place to go to, is important, even if they don't want to interact through our digital experience.
Yeah, I think the focus of the big techs, the new banks that are entering this market, is that they do not have the brick and mortar. So for people seeking the traditional way, I think it's actually advantageous for the credit union to offer that brick and mortar warm fuzzy experience, right? So what the trend is that with the new generation coming up, there we see an adoption. So it is imperative that the credit union adopts them, but the core, which is like the traditional, I don't see that going away anywhere. So as long as they feel that they need to see the person to feel comfortable dealing with the financial thing. Credit union or other banks that offer the brick and mortar experience still offers that, right? And that's the way they would feel included. In doing so, however, I think there's opportunity for the bank to educate the people seeking the traditional way in the benefits, right? So if they have to travel to make a check deposit, they might not even think about it, or they might think that it's unsafe. So by educating them that small things can be taken off by the digital platform and helping them adopt them, I think is going to bring down the cost of operational cost of the bank. So I think it's a good spot to be able to offer them, but at the same time, encouraging them to adopt the platform would be something that needs to be pushed forward for.
Yeah, sure. Thank you, Heath, and thank you, Parveza, for giving your view on the first question which we had from Pradeep. Hope it answered his query. And next, we moved on to the next question which we have received from Natarajan Kumarvelu. So his question is a great question. I think he has given a mix, so I'll just read it out. We are seeing increased scrutiny from regulators on fintechs and banking as a service providers. How can credit union work with technology providers to alleviate such risks and build necessary controls, audits, and reporting? What mix of, and the second part of the question is, what mix of AI, that is artificial intelligence, and actual human intelligence, in your view, works the best to avoid bias and false positives? So from the crate, maybe we can start with Heath. We are seeing increased scrutiny from regulators. How can credit union work with technology providers in this space?
Yeah. So I think any startup, by definition, is trying to disrupt an industry, and they're doing so usually by stretching the rules a little bit and trying to blaze new trails. Right. That's where most innovations occurred. If you go back to PayPal, in 2000, really, can you do that? Well, we just did. So and then the regulators caught up with them a little bit. Right. So I would say again, as a traditional financial institution who's being held to the standards of the NCUA and other regulatory entities, we have to make sure that we're staying in regulation. We're only partnering people who also have. So partnering with different organizations like, the Credit Union Associations of America or the equivalent for small banks and such. I think you're creating an opportunity to make sure these fintechs are passing the snuff test before you're pulling them and integrating them. You don't just integrate with anybody off the street who has an idea. You're making sure that the regulations happening there, and then it's been mentioned several times so far about making sure that our lending practices and decisions are auditable to make sure that they're in line with what regulatory practices would be is important. So any fintech we're integrating with has to be able to provide that data so we can accurately do that. And I would suggest in most cases people would have any kind of credit decisioning still flowing through your credit engine, so you can do your full due diligence, so you can provide that information to it. You're not making decisions based on the fintech alone.
And what mix of AI and actual human intelligence, in your view, works the best to avoid bias and false positives?
I think the approach, I would say the approach would be a key. So what is the starting point? Like, as long as you like we have stated, Heath and I kind of talked about this, is as long as your approach starts with a business case and you have your legal and your compliance input while developing this business case, and then seeking the right partner, like Heath mentioned, which can provide those audits that are sought by the regulators, right? So if you follow these steps, and if you involve legal and compliance in here, then you bring that part about the human side of it, right? You are providing the human input that these are the things that needs to be done. So when you're running the AI algorithm, you can check that whether these things are compliant. So if the regulator says, just an example, you cannot look at social media things, which some fintech do. But if that's not something you cannot do as part of your audit, then you need to make sure that that is taken out. And then the other thing which we also discussed was about being aware of the unknown bias this AI algorithm puts in, because the last thing you want to do as a bank is making biased decision, which would really put you under the regulatory regulators' focus, right? So I think that would be a good mix, understanding the algorithms, the inner workings of it, involving legal and compliance, and making sure you have a particular business case so that your models are trained on that, right? Even if you are trying to do a unsupervised, you still have guardrails in place that would allow the model to explore only in the area you specify and not like go haywire.
Sure. So we'll move on to the next question, which is there. I think Chelsea is also back, but I'm just reading out the few questions, Chelsea, so that from the audience side, so that we can cover it. So there's a third question which came from Shelly Peter. What considerations are important when selecting and implementing fintech partnerships for compatibility and scalability? This is specifically not related to credit unions, but it can be for any fintech partnerships which we do.
Yeah, I guess the one thing I look for is really a little bit of due diligence on them. Who's using them already? How big are they? What's their customer base? Do they have audits starting to occur against them to make sure that they won't reflect poorly in our audits later on? And then after that, it's, again, we don't like to be the first in. I'd rather see other organizations starting to use it and start to see some customer demand before we invest the time to try to integrate with it. That's my Turing test anyways.
And the other way I have seen trade unions. So one way to engage with fintech is actually in starting a partnership with them. But the other way I have seen some trade unions or banks, especially good trade unions, do it is that what they would do is they would buy some of the loans originated by fintech and see how it performs. They would monitor the performance. And one example was, I believe, Alliance Credit Union, who explored a new asset called solar loans by using this strategy. So they say bought a portfolio of loans which are originated by this fintech, and that's how they started their fintech journey. They did not necessarily go with technology, but they used the end product, and by doing this, what they did was they would also sell these loans, the portfolio, to like other credit unions who are in their journey or considering. And that way, the whole collaborative aspect of credit unions helping each other, that comes into function too. So yes, the people so there are two ways, right? He mentioned you do the analysis, you make sure you are partnering with the right fintech. That's one way. Or if you're too cautious, you can actually start by buying some portfolio of loans and see how they perform. Share it with your collaborators in credit union space and see. That could be another way to do it.
Great insights by Heath and Parveza, I think. I'm sure Shelley Peter's question is answered. We have a couple of more questions from the Trajan. So one is, given the current market landscape with inflation, uncertainty of Fed rate cuts, do you think there will be consolidation in the credit union space in the near future?
I guess I'd say, the credit union space has been a little bit more difficult at the moment in the not-for-profit space in general. So I would say that we've regionally seen some, at least in my region of the country, where some smaller credit unions are being absorbed by larger ones. I do think that what we're seeing in rates has stabilized, which has made it easier for this industry to stay relevant, or credit unions to survive. So unless we see drastic changes in those spaces, I'd say credit unions in this current financial moment are more insulated than maybe banks, more so because they're not. I think the more volatile sector right now is commercial, and more credit unions stay in the member space, at least in my region they do. So maybe a little less volatility to their current member base.
Sure. And there's another last question, which is there. Do you see meaningful impact of blockchain and tokenization in payments, reconciliation, and cross-border transfers?
Yes, definitely. I think the whole blockchain, right? Like they make a tamper-proof copy of transaction and makes it immutable, right? That's kind of the basic thing they provide, and the transparency provided by and logging them in the shared ledger. I think I see this being a huge benefit in allowing credit union to offer international transactions, because it's going to first enhance security and then at the same time bring down the cost of processing them, because they can remove intermediaries by using blockchain. So I think there's huge potential in that technology for credit union in the payment space.
Great. So Chelsea's back as well, and we have finished with the questions. I'm sure all the audience must have got meaningful insights from Parveza and Heath. So Chelsea, over to you for the few pointers which is left for the day.
Yeah, I did. I kind of also had a question, if you don't mind me asking it, because it was kind of one of the last points that I wanted to hit on, which was the difference between buying versus building your own software. What's the difference between sending it or outsourcing it than keeping it in-house?
Yeah, and I can jump on that one. So, and I have an implicit bias towards building, coming from a software engineering background. However, I do think that it's a relatively easy, economic decision to make inside of an organization. Is, as you look at software that's available in the marketplace, if it's a commodity type operation, so if it's something that you can buy off the shelf very easily, everybody sells it, then you should probably buy it. You shouldn't build that. But I think when there's opportunity to differentiate yourself from other financial institutions in this case and try to be better than them, that's the great opportunity to build. Now, that being said, a full digital banking platform, if you have a purchased one right now, getting into the building game is there. It's kind of a steep ante because now you got to hire a whole team. You got to start from the ground up. That's going to take you a while to get that built up. So that's maybe difficult to get into. If you're lucky enough to us where we had been in that space for a while, it's a nice space to be because now you can maintain, you can keep chasing the new edges, but you do have to continually invest in it. The good news is for people who want to build is purchasing, like for instance, a mobile app experience, extremely expensive. Based on your membership, you could easily be spending millions of dollars a month on that experience. So that does pay for a very nice team to help build it out. So I really think you have to do what's best for your financial institution and really consider, if you're looking for that experience that isn't just the plain Jane experience that you can purchase from Fiserv or Jack Henry or whoever, and you really want to start hitting these edges and trying to bring these fintechs in earlier than what they're going to allow you to do, you should definitely consider building those experiences and maybe start with small experiences. It doesn't have to be the whole thing, right? Many of these platforms allow augmentation. Find that workflow that you really want and how could you build that out, perhaps start with a smaller team. And I think there's a lot of opportunity to save a lot of money and have a much more efficient go-to-market strategy and to differentiate yourself from your competitors in a way that allows you to maybe gain some membership, especially if you have an aging demographic and you're chasing the younger membership. It's a great way to try to chase some of that digital first generation, right?
And
Yeah.
along
Couple
those
of things
lines,
I would like to add on to what he just said is what he said. I totally agree. But either of the strategy, it comes down to getting a buy-in from leadership, right? So being in the tech world, getting budget, it's a big deal of conversation involved. So leadership buy-in is crucial here. And to get leadership buy-in, the financial buy-in, there are two things you have to consider. One is the ROI, right? With this approach, what he suggested, it would make a perfect sense for ROI, but it's a case-by-case basis too. So I think it has to be evaluated from an ROI perspective to get that leadership buying to convince that business, right? And the second thing is the speed to market, right? I mean, if the integration of a existing solution you think is going to take you so much more time than just getting a quick team together and building, your skill level, the skill level of your inherent in-house technology team is superior and can be built. So I think that speed to market consideration, the ROI consideration, those two also are important things that will factor in as to which direction you go.
Yeah, and I think on that same consideration, it's also kind of, you want to do something that's innovative. So I do think, building a team in that sort of case, like if you're doing something that's not out there yet, or that you're, wanting to upgrade, having that team there. But then there's some things where it's like you're rebuilding the same wheel, and just buying what's already out there makes the most sense for some banks, especially if you're not someone that's been in the digital banking forever. It makes sense to kind of like have that software that's already out there. And I think kind of along those lines, that was the last question that I had. So I do appreciate you guys answering everything for me. And if anyone else has any more questions in the attendees, please throw them in there really quick. And if not, did you guys have anything else to add on, the back end of it, kind of the stuff that we discussed through today that we didn't hit on?
I don't, though. I definitely thank you guys for your time today and giving me the opportunity to talk a little bit about the financial sector.
Thank you. So let me provide the concluding remarks from AI CodeSpot side. And in case any question comes in, we can see that as well. So thanks a lot, all our esteemed speakers who came and took their time for this particular panel discussion. And thanks to Chelsea for the excellent moderation of today's session. We had, a lot of attendees who came and who I'm sure they found it to be engaging and enlightening with the thoughts with all our speakers shared. As we wrap up this conversation, I would like to take a moment to recognize and thank our community partners, speakers, and all our attendees for the ongoing support and participation over the past 3 years. Your involvement has played a crucial role in creating an environment like this, which is conducive to knowledge sharing and enrichment. The insights shared by all the panel members were truly exceptional. We appreciate their collaborative spirit and expertise to come and share the knowledge. For those who may have missed any part of today's session or wish to revisit it, the recording will be available on our company's YouTube page for your convenience. Looking ahead, we are excited about the promising technological advancements that lie ahead in the coming months. At AI Core Spot, we have diverse line of events planned across various sectors, which includes the banking, financial, insurance. We have in telecom, in retail, in supply chain, manufacturing, healthcare, and much more. So we encourage all of you to stay connected with us for the ongoing learning opportunities and updates on the latest technological developments. You can find a wealth of knowledge, including detailed event announcements and registration assistance on our website, on all our social media channels, which we propose. Your support is invaluable to us, so please consider liking or sharing our content with your networks so that it will give you more valuable to everyone who wants to understand about the technology. Special mention to InfoVision, our esteemed knowledge and innovation partner, and Digit7, who is our technology partner, for the unwavering support and collaboration. Be sure to explore their websites to deep dive into the world of technological advancements. We thoroughly enjoyed hosting this session and hope you found it as enriching as we did. We look forward to continuing our journey together and bringing you more insightful sessions in the near future. Until then, take care. Thank you once again, everyone, for your participation and support. Have a great day and nice week ahead. Bye.
Okay, thank you.
Thank you.